I'm Catherine Ross, live from the NYSE, and we're here with Jim Cramer. Jim, earnings are topping the headlines today.
Right.
We've got bank, we got pharma, we got Netflix. So let's kick it right off with the pharma for the pharma sector.
Well, look, J&J had good numbers. They had a little bit, almost 8% growth in pharma. But UnitedHealth had good numbers, but that's healthcare. That's the bane of all portfolio managers' existence. We'll talk about that on our call for action alerts, but it is incredible that stock could be opened up 8. It should never have opened up 8. It should have opened down and then it could trade up. I don't know who these people are.
Is this a sigh of relief for investors?
What?
The UnitedHealth, the J&J.
Well, UnitedHealth's bad.
Well, sorry, so J&J.
J&J is good because it was driven down by talc, and it turns out that you sold it too cheaply if you sold it at 128, 130, 135 on talc, because what you really care about is they have real growth. And you have to back out the dollar, but the growth is very real.
What about, why did you choose UnitedHealth? You said it was bad. Why did you choose it?
UnitedHealth, we've been in it forever. It is the best. One day all of this will pass. We don't know when. I am not concerned. I know that it's going to go lower. One of the things, sometimes you own a stock, you know it's going to go lower, but you see value, and you just have to wait. You can't just say, okay, I'm going to buy low and sell low. If you think that this stock is a winner like I do long term, you have to ride it out. And I think that people are not used to doing that. But this is a charitable trust. We're riding it.
Now, I just want to clarify, UnitedHealth is Real Money's stock of the day, so he chose it this morning as Real Money stock of the day, which means that there's going to be comprehensive coverage.
Well, I knew that it was going to be difficult, and I knew that people were going to get it wrong.
And it was a tough conference call.
Well, I mean, it was recognition of the political environment.
Okay, so you can go on realmoney.com and find comprehensive coverage from Kevin Curran and all of our other Real Money writers. Now, Jim, I want to jump into Bank of America's earnings.
Okay, so Bank of America, I remember I did this piece last week about how they're coming in too hot. JP Morgan drove every stock up. You had, I think Morgan Stanley's going to be good. But you had Citi being good but not good enough because it wasn't JP Morgan. You had Wells Fargo actually being bad, where they guided down. Bank of America did not guide down. They focused on this net interest income and won't be as good as last year. And I say that's false. Okay, don't sell it on that. They had very good deposit growth and very good loan growth, and that is the magic elixir that gives you fantastic leverage on the earnings. So those who are selling that, again, making a mistake.
All right, now
that's 1 down, 4 up.
So I want to talk to you. You are digging in deep to these stocks on AAP's Real Money daily rundown over on AAP.com,
right.
ActionAlertsPlus.com. For those of you who don't know, you can go and sign up. Now, we got to dive into Netflix. We got to do a quick
Sure.
three things to watch.
When you have all these analysts saying it's going to be good, then usually it's good. Okay, I'm aware that there can be sometimes where they're wrong, but it's a cacophony of analysts all say it's going to be good. So the stock's going to move up a little, but the stock was knocked down. I did a piece on for the site on Friday for Real Money about how Disney had driven down Netflix and Apple, and that both were mistakes. There's plenty of room for everybody. And I think that the idea of selling Netflix when you've got so much programming, you have billions of dollars of programming that people love worldwide, is a mistake.
But give me 3 things that you're going to be watching in the earnings report.
Well, I want to see costs. It's always important. I want to see international signups. That matters. And then I want to hear about Disney and whether I just need to hear the words from Reed that there's plenty of room for everybody. If he says that, we're fine.
So cost, Disney, and what was the third one?
And then recognition that even though there is, that things are fine. Look, if you want to look at Netflix, it's sign up, sign up, sign up. I think sign ups will be good.
All right, and before we wrap, I got to ask you, what is Fang and why are they also interconnected?
What is Fang? Facebook, Amazon?
Yeah, what is that? Break it down.
Well, this is something I came up with 6 years ago that is about the companies that have outsized growth regardless of any economic growth, because there was very little growth at the time. These stocks have all gone up very big. Facebook was just a way that people communicate. You knew Zuckerberg. You didn't know Zuckerberg at the time was violating everybody's privacy. It was only 1A back then. Amazon, which I think is still the greatest story ever told. Netflix, because it didn't matter what they did. All it cared about was signups. And then Google used to be good, and now it's Alphabet. And I think Alphabet's about to break out because they're charging for YouTube. And then I added a second A, Fang. And that was because I felt that Apple when Apple had gone all the way down, it was silly. and recommended it.
And why are they interconnected? Why do they trade so connectedly?
Well, because they all are high growth stocks that are regarded as being, in one form or another, a place on digitization and the web.
Now, I just want to point out to our viewers that while UnitedHealth is our real money stock of the day, you can find other coverage from Sarge Guilfoyle, who wrote all about Netflix, and he's looking at what is going on, what he expects from the earnings, and you can also find, right before the bell, we have a Netflix live blog on TheStreet.com run by Eric Jonza, who Jim is a huge fan of. And I'll be live tweeting the Netflix earnings call at 6 p.m. on TheStreet's Twitter. Now, Jim, thank you for joining us. We got to head on over to actionalertsplus.com. We got to do our daily rundown because I want to talk to you more about UNH and J&J. So, for all of you watching us on Facebook or on TheStreet.com, we are now jumping over, as I said, to our Action Alerts Plus members-only club video. And Jim, I know that you and your team are making a trade today, so we got to talk about that. Yes. That's exciting. So go ahead and hop on over to actionalertsplus.com. I'm Catherine Ross with TheStreet. We'll see you guys tomorrow.